Hi people, good morning. Hello people, be there. Yes. Come on, start your videos. Good morning, people. Hope you guys remember what we did yesterday. What we did, tell me. We started with a topic called as what? Cash budget. Correct. Good morning, Hyderabad. Come on, get up. Put on your videos. Come on. Yeah. Good. Good to see some people on time. Okay. So yesterday we did talk about cash budget, right? Am I audible properly, Mohsin? Yes, audible now. Okay. Yeah, because Mohsin was like checking something with his headphones, so I thought not audible or what. Yeah. So we did discuss the first three questions of the cash budget classwork, right, people? Correct. So let's continue further. Now, see, today, you know what happens when we start with these questions, no, to learn few new concepts today. Okay? So let's start with that. See, when you read this question number 4, you realize question looks small, but it asks you to calculate something which we haven't discussed till now. Okay, so let's talk about it. See, a firm maintains a separate account for cash disbursement. Means for using the cash, they need a separate account. It's something like we have no petty expenses. We have a separate petty cash account, something like that. Total disbursements are 1,05,000 per month or 12,60,000 per year. So the cash requirement, I would say, is 12,60,000 is what? It's the annual cash requirement. Okay. Administrative and transaction cost transferring the cash to disbursement account is 20 rupees per transfer. Then you are told that there is something called as marketable yield is 8%. See, something totally new in this question is this. What you have to do, you have to determine what optimum cash balance according to William Jack, that J stands for Jack, William Jack Baumol model. Okay, fine. Means what? First, you have to learn this concept of what precisely is this optimum cash balance. Otherwise, see, we have nothing to do in this question, right? What is this annual cash requirement? What is this transaction cost? And what is this marketable security yield? See, unless we talk about this, nothing can be done. So let's go ahead and do it. Okay, so our today's, yeah, this was about all about yesterday, right? I hope you remember this normal course. This is how you to follow. So our today's agenda, we start with this. What we have to discuss today is starting with William Jack Baumol's cash management model. Okay, this is our today's agenda, right? Okay, first we have to talk about this. What precisely is this William Jack Baumol's cash management model? Okay, so I'll explain you like this, that what it helps us to do, it helps us to calculate optimum, most ideal, or the best you can say, cash balance. Okay, sir, but then this is needed? Okay, see, I'll tell you. See, every person, all of us, those who are dealing with finances, those who are dealing with cash, those who are managing the finances at home, at office, whatever. Okay? We always have this double whammy situation in our mind. Okay. See, I always need some cash in my pocket. What for? Yes, for carrying out my day-to-day expenses. So I withdraw it from bank, and then at the same time, I know that whenever I withdraw from bank, what happens? I suffer some loss of interest. Did you understand what I said? Right? Hello? Hello? Did you understand the contradictory situation that I told you? Right? See, that whenever I go for withdrawing money from the bank, now see, suppose my annual expenditure, let's say monthly expenditure is 10,000. I need 10,000 rupees for my monthly expenditure. That means my annual expenditure is 1,20,000. Right? So what can I do? I can directly go to the bank, withdraw all 1,20,000 and bring it home. So I won't have to travel again and again to the bank. Correct. But you all understand, sir, in this process, you will lose so much of interest. You understand what I said? You understood. So see, there are two considerations. One is a transaction cost. It's like I say, okay, fine. I'll send my person to the bank. He says, sir, you pay me no for the fare, for coming and going back to and fro. I said, okay, fine. I'll pay you 100 rupees. He says, 100 rupees is sufficient. I'll go to the bank and withdraw the money. So I can say transaction cost is 100 rupees. Okay. Going there and coming back, transaction cost, one time withdrawal is say 100 rupees. But you know what? I think like this. Okay, fine. Let him go to the bank, withdraw all 1,20,000 at one go. So I don't have to pay him 100 rupees again and again. Okay. So what I do, I send a person, give him 100 rupees, but I take this 100 rupees, go to bank, get all 1,20,000 in one at one go. So he goes to the bank and withdraws 1,20,000. Great. Next time onwards, I don't have to spend 100 rupees. But what if bank was to give me 10% rate of interest? The 1,20,000 that I withdrew on the very first day, I'm going to lose some interest. Wherein I surely know that my monthly expenditure is not more than 10,000. So see, this is a dilemma in the mind. You understand what I'm talking about, the dilemma in the mind. It's a confusing scenario. What should I do? Right? And that is what is how much exact amount of cash that I should maintain so that the balance comes. Okay, so that's what we are talking about. Right? So it helps us to calculate what? Optimum cash balance. Okay, so optimum cash balance, it will depend upon two things that we just now discussed. One is a transaction cost. Correct. And the second one is the opportunity cost. Okay. What do you mean by transaction cost? You understood. Take a, you need to, let's take it like this. The fare of the auto. Okay. You go, you come back, you spend some money. Okay. Opportunity cost, what we can say. Loss of interest income on cash withdrawn. Did you understand the opportunity cost? I'm asking you people again. Did you understand the opportunity cost? That the moment I withdraw the cash and keep it at home, what I lose? I lose the interest part. Everybody, those who are present are clear to this concept? Okay, fine. Yeah, Okay, so now people, let's do one thing to uh, clear this dilemma and to arrive at William Jack Baumol's uh, cash management model. Let's take one simple example. I'm going to take one simple example. Let's say the annual cash requirement, also known as A, say 80,000 rupees. Okay, then transaction cost is, let's say, 100 rupees. Okay. Transaction cost is denoted by T, and rate of returns opportunity cost, or also known as the holding cost, denoted by H, is, let's say, 16% per annum. Huh? So now I'll just clarify these all assumptions again. Annual cash requirement, to you understood that the person needs how much? That the person needs 80,000 rupees for the whole year. Transaction cost is 100 rupees. Means one time he goes to bank to withdraw the money and comes back, he spends how much? 100 rupees. Okay. Rate of returns is 16% per annum. Means wherever he has kept his money, no, in whichever bank, financial institution he has kept his money, they have promised him how much rate? 16% per annum. What does it mean? The moment he withdraws that money, he loses this 16% per annum. So it is called as a holding cost, right? One word I've already told, opportunity cost. So the second word is holding cost. See, the moment, suppose I go to the bank and withdraw 80,000 and keep it in my wallet, what happens? I know that whatever money I have kept in the pocket, it is costing me 16%. The holding cost, the holding of cash, right? It is costing me how much? It is costing me 16%. Means what? Had that money remained in the bank, I would have earned 16%. Is everyone clear to this three parts? Annual cash requirement 80,000 is understood. Okay, fine. That's an assumption. Transaction cost, going, withdrawing the money and coming back, per round 100 rupees, and understood. Holding cost you have understood? Everyone? Yeah, because that is the most important thing. Because if you don't understand the assumptions, then you have nothing to do in the theory. Then what at the end, sir? Okay, fine, sir. Disclose the formula. We will put into the formula and get the answer. Okay. So now what we will do, uh, okay, I can do one thing. I can tell you the formula at the beginning, and yes, some of you might say, sir, if you know the formula, then why are you taking through all this? See, optimum cash balances formula wise is calculated like this. I'll just share with you people, like you should know where we are heading. Okay? In general, in life also you should know, and over here also you should know where you are heading. The formula for optimum cash balance, according to this Mr. W.J. Baumol, William Jack Baumol, it is root of 2a t upon h. So if I say forget all the explanation, calculate with the formula and finish the matter. So 2, annual cash requirement 80,000. Transaction cost, how much we took? 100. And H is how much? 16%, no? 16% when you do on calculator, no? 16 upon 100. 0.16. Check out the answer, what it comes to. 2 into 80,000 into 100. Whatever comes, I'll divide by 0.16. And I'll take a square root. My answer comes 10,000. Okay. Means According to Mr. Baumol, Mr. William Jack Baumol, I should send the person and withdraw how much at a time? So I should withdraw 10,000 at a time. Did you? I know I did not explain anything, but did you understand the calculation according to Mr. Baumol's formula? Right? So how but sir? How 10,000? So one simple explanation is always there. See, he has devised a formula, right? But you know what? We always like to know, okay, how it, okay, fine, sir, but the formula must have come with some explanation, no, with some base, no, right? So that is a basic core human nature to know the things. So we'll discuss it once, right? Let's see. So what I will do is, we will first of all, no, go with trial error method. Means what, sir? Okay, this though you understood. This is a straightforward answer, right? Okay. Now we will just do some trial errors and try to arrive at this. Okay, let's try. Okay, let's say we will uh, optimum cash balance, number of withdrawals, and transaction cost, opportunity cost. Sir, what are you writing? You're going to create uh, some imaginary examples that what if he withdraws a certain amount of money and then we'll check out what happens. Let's see. Okay, so I make some assumptions. See, let's say, I'm not knowing this William Jack Baumol's formula. So I say, chalo, let me withdraw all 80,000 at one go. Okay? This is our first assumption. What will happen if I withdraw all 80,000 at one go? Number of withdrawals would be only one, right? So what is our transaction cost we have discussed? One round is 100 rupees. So I'll spend 100 rupees on the transaction cost. Okay. But sir, you wrote average as 8%. Why so, sir? Okay, I'll talk about it. See, holding cost is 16%, right? So what am I going to say? You know what? See, the very first day I withdraw all 80,000, I lose 16% rate of interest. But I think here I am trying to unnecessarily aggravate my own situation. Means what? See, friends, why on the first day I withdrew 80,000, right? Okay. Am I going to keep all 80,000 as it is up to the last day of the year in my pocket? Yeah, people, tell me. First day, I withdraw 80,000 and I start crying. And I will lose the interest of the whole year. I will lose the interest of the whole year. Tell me, why did I withdraw this money? To pay for my expenses? Yes, people, right? So will I keep all 80,000 as it is from day one till the last day? No? Sure? Okay. So now what does that mean? Suppose, okay, 80,000 was there on the first day, fine. But see, by the end of 15th day, this balance might have reduced to 70k. It will gradually reduce, no? Yes or no? So how do I claim that I lost interest on all 80,000 k for or all 80,000 rupees for all full year? So here onwards, I'll lose interest on 70,000. Suppose at the end of 30th day, it comes down to 65K. Suppose at the end of 60th day, it comes down to 60K. Suppose at the end of 90th day, it comes down to say 52K and so on. And on the last day, this balance would be what? Nil, na? So will I be losing actually 16% on the full amount? Say yes or say no. Yes or no? No, I am not going to lose on all 80,000 for the full year. So it's an average value, half of it, because starting full balance, ending zero balance, in between the balance will gradually go on what reducing. So did I take average 8%? You understood? Okay, fine. So we will continue with our working now. So now I've taken average 8%. So how much interest I will lose? 8% of 80,000. 80,000 into 8% comes to 6,400. Oh, means transaction cost I spent 100 rupees and I lost interest of 6,400. So what is my total cost, people? My total cost is 6,500. Understood this working? If yes, remain calm. If not, raise your hand. Okay. So I feel so Keshav has raised his hand. Yes, Keshav. Keshav raised, but Keshav put it down also. I think it was by mistake. Again, okay, again. Yes, please.
Sir, can you once again explain this 8%?
Where is Keshav? Keshav, turn the video on, dear. Let me see whom am I talking to.
Yes, sir.
Good morning.
Sir, good morning. Sir, can you once again explain this 8%?
Listen to me. Listen to me. What is the rate of interest on annual basis?
16%.
Correct. But see, when I will be able to claim all 16%, see, this 80,000 I take into the calculator and I into 16%, when I do into 16% now, that means I keep from day one till see in bank, suppose if I keep 80,000 rupees, when I will get full 16%.
If it is for the whole year.
It is correct. If it is for the whole year lying with the bank.
Yes.
But you tell me, will not I withdraw in between?
Yes.
Because it's our monthly requirement, whatever it comes to 5,000, 6,000, 7,000, we keep on withdrawing.
Yes, sir.
So will we get the full amount of interest of 16%?
No.
So I think it will be a wrong cry now. Oh, I lost all 16%. It's wrong here. See, okay, I'll show this timeline to you again. See, where one? See, that's what I was talking. On day one, okay, agreed. You withdrew all 80,000 and you were to lose interest on all 80,000 for the full year. But then see, the cry is false. No, on 15th day, the balance has gone down to how much? It has gone down to 17,000. So here onwards, you lose interest only on 70,000.
Yes, sir.
Here onwards, 30th onwards, you lose interest only on 65,000. Here on 60th day onwards, you lose interest on 60,000. 90th
Yes.
day onwards. So what do? I'll keep it drawing at a regular intervals.
Yes. Average.
Average value. Correct. That's why what we have done, instead of saying that we are going to lose all 16%, we are taking half of it. Average value, how much? 8%. Are you okay now?
Yes, sir.
I'll continue.
Thank you, sir.
Yeah. So I see, oh my God, what a tremendous loss of interest. Leave it. I will bring 40,000 at one go. Now, now what will happen? I will send my person two times, no? I hope you understand. Total annual requirement is how much? 80,000. No? So we will have to send the person two times. So we'll spend 200 rupees on the transaction cost. But now what we will lose the interest only on 40,000 now. So 40,000 into 8% comes to 3,200. And I'm very happy. Significant fall in my cost. Hey, wow, this is only 3,400. Now see, now I'm motivated to send my person again and again. I said, now do one thing, bring 20,000 only at one time. Now, the moment he brings 20,000 only at one time, He will have to withdraw. I will have to send my person how many times? 4 times. Okay. That means I will spend how much? I'll spend 400 rupees. So what will happen to the interest part? So it will be 20,000 into 8%, 1,600. That motivates me further. Oh wow, the cost has come down to, overall cost has come down to 2,000. So now I will tell my person, see, do one thing, leave it. You go and withdraw 10,000 at one go. Okay, you withdraw what? 10,000 at one go. Okay, fine. So what will happen? Number of withdrawals would be how much? Number of withdrawals would be 8. Correct? We want total 80,000. So how much? 800 rupees will be the transaction cost, and how much interest will lose? 10,000 into 8%, 800. So now see, the grid is getting more and more powerful. Wow, it has gone down further. Now I will tell my fellow, see, you have any work, Naina? Go. Again, you go and you do one thing, you will draw 5,000 rupees. So how many rounds you will have to do? 16 rounds, obviously, na half we are doing the amount, so rounds will double. So now we will spend 1,600 on the traveling cost, but interest loss will also be less. So into 8% I do, it's 400. But what I noticed, dear friends, I noticed that this is getting 2,000. Oh, means now I hope you understand that the benefit cost ratio has changed now, right? And so here he said, Salo, let me do one more trial. Do one thing, we draw 2,500. We will save on interest cost more. But 2,500, you have to put how many rounds? 32 rounds. So you'll spend 3,200 rupees on auto only. And how much interest you will save? 2,500 into 8%, 200 only. Bad. So I think now what has happened? Now the benefit is going away, and what you're doing, you're spending more on that auto part, right? So what is happening, friends? So now I think this makes it clear that we don't have to put so many rounds, and where we have to stop, we have to stop at 10,000 rupees. Correct? This is the best place to take a stop. Correct? This is a place where the total costs are minimum, right? And the same thing has come with the formula also. Right? Uh, is this explanation under Keshav? If your doubt is done, just lower your hand. Na? That again you have to ask something. Naina, fine. Just to make sure that once your doubt is done, put your hands down. Have you understood this, guys? Okay, fine. I know that. Still, sir, how this formula has come? Yes, I know this happens. How this formula has come. So I will put from my side one time explanation. See, formula is final now. Okay, by trial error also we got it. Only once, guys. See, nobody is going to listen. Nobody is going to ask us to derive the formula. But that always no human tendency. When you are told by the formula as it is, but no, sir, that's not done. You have to give us a logical explanation. So I will once give it. It is a mathematical derivation. If you understand well, not if you don't, then by heart the formula. Right? I have already given you trial error method and a proof. Okay, this is how it will be calculated. Still, if people feel like no, sir, we want how the formula gets derived. Done. You do that. Okay, but only once, huh? Right? It is like announcements on All India Radio. It will happen once. There is no rewind button. Okay. Chalo. Let's all of you, please pay attention. Yeah. See, students, one thing you should understand. And to derive, no, you will have to understand this. What has happened when we have arrived at optimum cash balance? See, if you notice, the transaction cost and the opportunity cost, they are in inverse ratio. One cost is constantly increasing, the other cost is constantly decreasing. Did you understand what I said? See, this is going down, 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 and this is going up, it's going up, so it's going up. but at this place it is becoming equal. Correct? So where comes optimum cash balance? We need to understand this, that at optimum cash balance, comma, I'll call it OCB, huh? Optimum cash balance. What happens, people? It happens that transaction cost becomes equal to opportunity cost. Correct now? See, you realize that one cost is continuously increasing, the other cost is continuously decreasing. But at one juncture, at this place, what has happened? The transaction cost and opportunity cost has become same, and that is your level of optimum cash balance. Okay, sir. Then how would you derive a formula from this? Yes, we will talk about it. You help me derive this transaction. Oh, page finishes. Doesn't matter. Uh, you help me derive this transaction cost of 800. How did we get this 800 rupees? You tell me. What is our annual cash requirement? Are you people there with me? Hello? Are you people in sync with discussion? Not only busy in copying the things? Because see, this is where now we will derive the formula. Okay, so be there, right? See, you can take a screenshot of this and later on write. But while writing, you will lose some logic. Don't do that. So be there in, because now it's a derivation time. Be there absolutely. Okay? Yeah. So what did, I hope you have understood this part, that at optimum cash balance, what is happening? The transaction cost is becoming equal to opportunity cost. How much is that? 800. The transaction cost is 800, people. Tell me how did this 800 come? Sir, you did 8 rounds now, so 100 rupees now. But how did I do 8 rounds? Sir, your annual cash requirement is 80,000. Listen to me very carefully. Sir, your annual cash requirement is 80,000. You divided it by optimum cash balance. Correct? 10,000. So you got how many rounds? You got 8 rounds, sir. Correct? And to that 8 rounds, you multiplied by transaction cost per round. Did you all understand what I wrote? A is the annual cash requirement, 80,000 rupees. Here we assumed the optimum cash balance as 10,000. Okay, sir, 80,000 divided by 10,000. How many rounds? Sir, 8 rounds. Okay, fine. And then per round, how much is the cost? Sir, 100. So 8 into 100, 800. So this A upon OCB into T, is this understood, people? Give me some thumbs up. Kudos if you have understood. All of you very sure about it? Okay, now the right hand side part, we will see how that comes. Okay, sir, the opportunity cost also come 800, sir. How did you get it, sir? Okay, you calculated as what? 8% of 10,000. Okay, so how does that happen, sir? 10,000 is our optimum cash balance in the present scenario. So you did into 8%. What is that 8%? It's an average cost, right? As we had a discussion, right? So it's a holding cost divided by 2. Holding cost is 16%, people. Optimum cash balance, how much we assumed over here? See, optimum cash balance, we assumed, sir, how much? We assumed 10,000, sir. And then what we did, we into 10,000, here we took that 10,000 optimum cash. Here we took, sir, that 10,000, okay, and then multiplied it by 8%. Sir, but what is that 8%? Sir, it is holding cost upon 2. Actual cost is 16%. We said, no, let's take average. So 16 upon 2, 8%. Everybody agrees still here. And now here onward, it is a simple mathematics, people. You see OCB here and you see OCB here. Correct? Okay. This is in denominator. Take it over here. It will go in numerator. So what will happen? OCB will get cancelled, or OCB will become OCB square. Cancelled or square? Square. Everybody agrees to this? Okay, now here onwards it is basic mathematics. So this side, it will be OCB square. Okay, then utilize this side. A is already here, into T is already here. Now you understand, this is H upon 2. This side it will become, what will happen? 2 upon H. Fair enough. Now what to do, people? Now you know, just take square root, and if I take square root, this will become root of 2 into a into t upon h is equal to what? Optimum cash balance. And this is William Jack Bowman's formula. Yes, Mosi, bolo. Tell me.
Good morning, sir. Sir, I'm audible.
Morning. Yeah, very much.
Sir, I've got this doubt. Sir, in this table, we've got everything that we have. It's for the entire year, right? For example, optimum cash balance is for the whole year.
No, no,
Number of
no. Means
withdrawals.
we will keep maintaining 10,000. The moment that 10,000 finishes, we will again go and bring another 10,000 like that.
Okay, so sir, over here, opportunity cost when the optimum cash balance is 80,000, it's 6,400, right?
Huh.
So we are losing, like, we are getting, there's a cost of 6,400 for the entire year, right?
6,400.
Yeah, 6,400, it's for the year, right?
Yeah, average value.
So, sir, even 3,200 and then 1,600, 800, all of these are costs for
Over
the
the
whole
year.
year.
Over the year, yes.
Yeah, okay, so that's the only thing that I wanted to ask.
Over the year. They are over the year. From day one till the last day. Average value.
Okay, sir. Thank you.
Hello, people. What are you doing? You're writing right now. Excuse me. You're writing right now. No. I strongly recommend we put a lot of time in understanding the formula. Take a screenshot, leave one page. Okay. See, I've handwritten now. So you'll also require almost the same space, right? How many of you are done writing already? Oh, many of you are done writing also. Doesn't matter. I'll share the page, take a screenshot, write it little later, huh? Please. But leave one blank page for this, huh? And once you take a screenshot, leave one blank page and go to question number 4 in your book now. You have to calculate that value also, na? Please calculate that value as well. Question number 4. Now you just have to fill up, people. Come on. I believe you people. I hope you'll manage to calculate it. Just put those values in the formula. No big task left out. Come on, be quick. And I hope you've taken the screenshot. I'm going to stop share. Calculate the balance and show me your answer on your calculator like this. Like this, you have to show me. Like this, you have to show me. Jay, I can see only the brand of your calculator. 25099 point something, no? Hai. So let's make it 25100. Correct, na? Jahnavi also got the same, na? 25099.80. Fair enough, na? Bhavita also got it. Okay. So 25099 point something. Charani, I can't see your numbers. Okay, got it, got it. You got the same, correct answer. Yes. So people, what is the final answer? 25099 point something, no? So let's make it 25,100. Okay. So why didn't you take these numbers to explain with trial error? You realize the number that has come as a balanced fee means optimum cash balance 25099.8. You realize that I took this example. Manu also got it. I can only see a glaring scheme. You got it now, 25099. Okay. Mohsin, yeah, got it. Okay, fine. So you must have understood now, people, that this was a well-planted example, okay, where a perfect value became an optimum cash balance. Had I tried doing with this sum, no, we would have left pulling our hair at the end of the day. 25099.80 to arrive at that value, it would take years to. Okay, so this is just a well-planted example to make you understand the concept. Okay, fine. So today is all concept day. You guys are done? I'll move to the next question. Sure, na? You want me to show the calculation, how it is to be done? 2 into, sure, na? Ah, okay, fine. So we'll move to the next question. Come on. Okay. Question number 5. Okay, so you know what happens? Today is the day of all concept-based things to be done. So we will talk about it. Sir, topic change. Yes, topic change. Question number 5. The following information is available in respect of Sai Trading Company. Okay. To teach you this sum, I need to go to this topic, estimation of working capital, and teach you a small part over here. Okay. Again, students, I want a rapt attention. Okay. Otherwise, it will be just going over and above our heads. Huh? So please pay attention. See, uh, what we discussed, working capital is what? Funds required for day-to-day business activity. Correct? See, sir, I'm going to teach this topic right now. No. I'll just extract what is necessary for me. So see, the extra capital that we need for what? Smooth working of our fixed asset is known as what? Working capital. So we all know what is working capital. Funds required for smooth running of our day-to-day business activity. Okay, sir. So then what we are going to learn from here? See, this topic basically teaches you how to estimate working capital. Okay, sir, we all know working capital is current asset minus current liability. So we'll learn how to estimate that, how to do current assets estimation, how to do current liabilities estimation. Fine. But what is this working capital operating cycle? Okay, see now, students. Suppose from somewhere I tell you that step 1 is done. Let's say estimation of working capital is done and it comes 5 lakh. Okay, so now you have to decide now how to finance. You need to bring this money. So you say how to finance, and your answer comes borrow from bank. Okay, you don't have this money. You say let's borrow from bank. Okay, fine. So you go to bank. Okay, so the bank manager says, "Hello, sir. Welcome, sir. Welcome, ma'am. What do you need?" Well, I need money. Okay. So you the moment you say I need money for working capital, he will ask you 2 questions. How much? Yes, sir. That Sandeep sir just now told us that it is 5 lakh. Okay. Then the second question that bank manager will ask you, he will say, what duration? Uh, then you will tell him, see that Sandeep sir hasn't taught us. We don't know what duration. You just give me 5 lakh, then I will tell you what duration. Is that done? Whenever you go to bank for taking a loan, number one, amount will be asked. Number two, duration. So you want it for 5 months, you want it for 6 months, you want it for a year or 2 year or 10 year or 20 year. What's the duration? The duration is necessary, no? What for we are borrowing this money? We are borrowing this money for working capital, day-to-day needs. So what will be the duration? That is called as working capital operating cycle. That is called as what? Working capital operating cycle. So means what? Okay, I'll explain. Suppose we are a manufacturer. Suppose what? We are a manufacturer. Okay. So how our production cycle will start? It will start from buying raw material. Correct. No, we are a manufacturer, so it will start from buying what? Raw material. So see, on the day one of the business, I'll buy raw material and I'll keep some raw material in the stock. Contingency, yes, always contingency. I'll keep some raw material in the stock. Now management decides that let's keep 1 month stock of what? Raw material. What management decides? Let's keep how much? 1 month stock of raw material. So you will buy the raw material and the raw material equal to your 1 month's requirement would lie in the godown. So why? Management feels so. At our home also it happens, no. The person who is in charge of kitchen generally purchases all the inventory for a duration of 1 month. Not vegetables, obviously, those who don't have shelf life, vegetable and milk, we don't buy for a duration of 1 month. But then at least rice, wheat, pulses, sugar, edible oil, everything can remain no for 1 month easily. So we buy 1 month stock of raw material. My money gets blocked over there. Same over here. Okay. After that, what will we do? We'll start selling raw material only. Obviously not, sir. We are a manufacturer. How we will sell the raw material? So we'll put it into the production process. Okay. Let us assume that your production process. Okay. Let us assume that your production process duration is also 1 month. Okay. So the day one you put the raw material in the production process, it takes 1 month to get it converted into finished goods. Now, dear students, tell me the money which I invested over here in total is blocked for how many months? 2 months. Initially it was lying in the godown for 1 month. Raw material was lying in the godown for 1 month. Then it went into the production process. Production process continued for a duration of 1 month, right? So now my money is blocked for a duration of 2 months. Everybody agrees on this? Okay. Now you guys tell me the moment the goods are ready from the machine, we just take it out from the machine and give it to the buyer. Take it from the machine, give it to the buyer. Take it out from the machine, give it to the buyer. Machine is damaged. Nothing comes out from that. What do we do? Take the machine, throw it on buyer. Huh? So there should also be some buffer, no? Right now, something goes wrong with the machine, something goes wrong with the supplier of raw material, something problem with the raw material, with the power failure. Don't you think that we should keep some stock of finished goods also? We should, na? Ideally, right? Na? Okay. So management says that let's do one thing. Let's keep 1 month stock of finished goods. Oh my God. So first I buy the raw material that remains in godown for 1 month. Then it goes into the production process that remains in the production process for another month. And we plan to keep 1 month stock of finished goods also. Now you tell me the money which I invested on day one, getting blocked for how many months? 3 months? Everyone agrees on this, right? People, are you listening? No actions today? What happened? Hello? Where is the spirit? Spirits are all in the bottles. Answer. Okay. You have understood that it will be totally blocked now for 3 months? Sure? Okay. Let's say now, okay, here onwards, what we will do? We will obviously sell the goods. Right. Now, see, now it's a time of giving credit. Now, our debtor, our customer says what, see, everybody in the market is giving 2 months credit. Are you giving 2 months credit? Then I will buy from you. Else, I'll buy from the next door shop. Oh my God. Even he wants 2 months credit. So now what will happen? Now, here onwards, I will give 2 months credit to debtor. Now, after the debtor pays me my money, here I will see my own money invested back. Tell me how many total months are needed to see my own money back? 5 months? So what I understand from this, when the bank manager is asking me, sir, how much loan you need? So I tell him, okay, I need 5 lakh of loan. Then he asks me, what is the duration of your loan? Then this working capital cycle will move in my mind. Okay, 1 month raw material stock, 1 month conversion process, 1 month keeping the finished goods, and the debtor will pay me after 2 months. So my money will get blocked for a duration of 5 months. So now the bank manager, sir, what happened, sir? What's your duration? How much? Okay, fine. And then I see the whole cycle in my dreams and tell him, okay, give me for 5 months. Got this point? Okay, see, this is a working capital cycle duration, friends. So 5 months. Okay, now see, after looking at this big cycle, if my creditor pities on me, he says, what a big cycle here. You do one thing, you don't pay me immediately, you pay me after 1 month. So he says, okay, you pay over here. Oof, relaxation. So now my cycle will reduce to 4 months. So you can see the same thing, guys. I have just picked out from in between of the topic and I've taught you this, which is there on the next page. See, working capital operating cycle. This concept I just from nowhere I taught you this concept. Okay, this is a process of conversion of cash. Put a comma, else you today's era. No, you need cash back. It's not a cash back. It's a process of conversion of cash, comma, back into cash. Is known as what? Working capital operating cycle. That is the process of cash which is used for purchasing raw material to again get converted back into cash. But as what? As realization from debtors is known as what? Working capital operating cycle. And the time taken for this conversion of cash back into cash is known as its duration. Okay. And whatever we discussed, now you will see it over here. See our example. Raw material holding period, we said 1 month. Correct? Plus what? WIP, conversion period. Means only that, the duration for conversion into finished goods. So we said 1 month. Plus finished goods holding period. We plan what? We'll say we hold it for 1 month. Okay. Plus debtors collection period. Our debtors demanded a credit of how much? 2 months. So dear friends, if nobody gives me a credit, my duration is 5 months. But that creditor felt something about me. He said, okay, I will give you 1 month's credit, pay me after 1 month. So my net duration would be how much? 4 months. So I'll go to the bank and ask him, okay, fine, it was 5 months, but creditor is also giving me some credit. So I'm relaxed to that extent. So you give me it for how many months? 4 months. Okay. People, did you understand this duration concept? Very much sure. Huh? The whole sum, the whole next sum is based on this duration concept. Okay. which I solved over here. So see, this is what the whole idea about what the duration, and now it's worth discussing that question. Yes, people. We'll come to question number 5. Okay. See. Now you'll realize this. It's very easy for you now. Okay. First thing, you know what I did? I explained you a broader view. I explained you for a manufacturer. Correct? Just now what I explained you, it was for a manufacturer. Correct? So he's holding raw material stock, he's holding WIP stock, etc. etc. If he is a trader, so will he hold raw material stock? No, if he's a trader, you understand, trader, he doesn't hold raw material and doesn't produce anything. He will just hold finished good stock, sell it to the debtors and recover the money. Okay. So see what happens over here in this question. The following information is available in respect of Sai Trading Company. As the name clearly suggests now that he is a trader. Okay. See, on an average, data are collected after how much? 45 days. Inventories have an holding period of 75 days, and the creditors' payment period is 30 days. Okay, fine. The firm spends a total of 120 lakh annually at what? At a constant rate. It can earn 10% on its investment. What you have to do? From the above information, you are required to calculate cash cycle. Okay. So this cash cycle means working capital cycle duration. Just make an addition in the question. Assume 360 days in a year. Okay. Fine. So now see, he's a trader now, people. So what will happen in case he's a trader? See, here we discuss that it's going to be raw material holding period, but the raw material holding period won't come now. Why? Because he's a trader. He doesn't buy raw material. He doesn't convert it into finished goods. Where it will start directly from finished goods holding period. Okay. So let me write this. We talk about question number 5. Question number 5. A. What is that? Cash cycle means only working capital cycle duration. Okay. So what we discussed, are we going to write raw material holding period and WIP conversion period? No. We'll directly start from finished goods holding period. We'll directly start from where? From finished goods holding period. So what is the finished goods holding period? Inventories have an average holding period of 75 days, right? Okay. Plus what? Debtors collection period. How much time we are allowing to our debtors? It is written in the question that debtors are collected after 45 days. So my gross duration 120 days. Okay. Now, is creditor giving us any credit? Yes, creditor payment period is 30 days. So less creditors payment period. How much? 30 days. So the bank manager is asking me, sir, you want working capital loan now? What is your duration, sir? Tell us, sir. Okay. With how many days? 90 days. I hope you have understood. Now, people, one simple question to you. So, buying the material, keep it in go down, selling it, and getting the money. This whole process, I need loan for the one cycle completes in what duration? 90 days, right? I hope you understood this calculation. Give me some thumbs up, kudos if you have understood this calculation. Okay, so one cycle takes how much? 90 days. Mostly you want to ask something? Yeah, tell me.
Sir, I do not understand the creditors part. Like, why are we subtracting? And I didn't get the logic behind it.
Okay. Let's do you first of all agree that mute kar diya. Are you there?
Yeah, sir, I'm there.
Ah, okay. Uh, did you first agree that in the earlier example, up to 5 months you were okay?
Yeah, yeah. Up to 5 months, I understood everything.
Okay, fine. That's what I wanted. Fine. So let's say on 1st January I start with this process. 5 months.
Yeah,
So it will end on when? 1st June.
yeah.
Means 1st January I'll start my money will get start blocking. So it will release on what day?
1st June.
You agree over here?
Yeah, 1st June we'll realize the payments from the debtors, right?
So that's what.
Yeah,
That's our cycle will get over there. Correct?
yeah,
How did we start our cycle? By buying the raw materials.
yeah.
Correct. Now the person who is selling me the raw material, who's that?
Suppliers.
Supplier means creditor.
Yeah, yeah. Creditor.
So creditor is giving me 1 month's credit. He says, forget, you don't pay me on 1st January, you pay me on 1st February.
Okay.
Now you tell me, when will Mohsin, will you go in bank on 1st January itself to borrow the money, or you'll go on 1st Feb to borrow the money?
1st Feb.
So now when on 1st Feb, the bank manager will ask you, sir, what duration loan you want? So what will you tell him?
Okay, okay.
You will
Yeah,
tell him
4 months.
5 months or 4 months.
4 months. 4 months. Understood, sir.
Absolutely.
Thank you. So just a minute. Keep that on the screen. I'll take a snap of it.
Sorry, dear.
I'll take a photo of the timeline that you just drew.
Please.
Yes, sir. I've taken it. Thank you, sir.
Yes, yes, yes. Okay, fine. So I was getting back to this. We see now one cycle is taking 90 days, right? The whole year duration is 360 days. So I have one simple question, friends. How many such cycles will happen in one full year? You can show it by your hand actions, hand gestures. 4 cycles will happen. Money getting blocked, getting released, one cycle. Like that, how many cycles will happen? 4 cycles, everybody agrees on this. That is the next question. See, that is what is asked. You're asked cash cycle that we have done, and you're asked cash turnover over here. Therefore, cash turnover, that is number of cycles. As simple as that, 360 divided by 90, that is 4 cycles. Hello, people. Should I go ahead? Should I continue? You're still writing? I'll deal with the next question. Okay. Okay. See now. So this was a 5A question. In 5A, we were asked two things. One is a cash cycle, and the second is what? Cash turnover. Done. Now, what is asked in question 5B? Let me write that. Question 5B. It tells you, it asks you minimum amount of cash to be maintained to meet payments as they become due. Oh, what do they mean by this? Minimum amount of cash to be maintained to meet the payments as they become due. That is simply working capital amount to be maintained to manage the expenses. Correct? Minimum amount of cash to be maintained to meet the payments as they become due. That is simply, guys, what? Working capital amount to be maintained to manage the expenses. Now, see, listen to me. What is our working capital cycle duration? Just now we found in the previous question, it is 90 days. Means I know for sure from day one when I start my cycle, from day one till day 90, I will not receive any money. The money will come on the 90th day. Till that time, I should keep enough money. I should keep enough money to do what? To run my business. So, what will be the money enough for this 90 days? How do I come to know? And see, that's why it is given in point number two. I'm not talking point B, I'm talking about point two in the question. What is written in point two in the question? The firm spends a total of 120 lakh annually at a constant rate. Did you get it? So what we can say, firms annual expenses, that is for 360 days, is 120 lakh. Correct, people? So, hello, did you understand this? What is the firm's annual expenses? 120 lakh. So how much they will need for 90 days? How do we find that? Proportionate, we do cross multiply, right? And then whatever is the amount of expenses of 90 days, no, that will become my working capital, because that much I should maintain with me, so that tomorrow any expense becomes due, I'll be able to pay it. See, so working capital cycle duration is 90 days. Firm's annual expenses, that is for 360 days, are 120 lakh. Therefore, working capital is equal to proportionate amount of expense for how many days? 90 days. As simple as that. So how will we calculate? We'll write like this: expense duration. Expense is 120 lakh for 360 days. Then how much for 90 days? Cross multiply. So 120 lakh into 90 upon 360. So it will be 30 lakh. Therefore, working capital requirement is equal to 30 lakh. Did you guys understand this? 90 days, we need sufficient money to meet our expenses of 90 days, because I know my working capital cycle is 90 days. So I invest the money today, it will come back to me after how many days? 90 days. So I should maintain enough money to meet my expenditures of 90 days. My expenditure for the whole year is 120 lakh. So that of 90 days would be how much? 50 lakh. That itself becomes my working capital requirement. Clearly understood by all of you? Right, people? Okay, great. Thank you, Manvi, for you. Okay. Actually, I'll come to branch. At time people don't even offer me tea, but okay, online so it doesn't cost. Ah, jokes are jokes. Okay. So now let us get into the next question. See, what is the question C asked? Savings by reducing the average inventory holding period by what? 30 days. Okay. What is the inventory holding period, guys? In this whole discussion, where it is? In this whole discussion, the inventory holding period, this is 75 days. Correct? It is going to reduce by how much? 30 days. So, what will happen? Tell me. The new inventory holding period, 75 minus 30, how much? 45 days. Therefore, what will be the new working capital cycle duration? It will change, na? But obviously. So what will happen? So inventory holding means finished goods holding would be for 45 days. Rest of the things same. Debtors collection period. How much was it? I'll check in the question. 45 days. So now the gross will become 90 days. Less what? Creditors payment period. That even doesn't change. No, only one thing is changing. Creditors payment period is how much? 30 days. So net duration 60 days. Right, this was a gross duration. Now see people, because of this reduction in inventory holding period, your net duration has gone down. Correct? If your net duration changes, but naturally your working capital requirement will also change. So what will be our new working capital requirement? Tell me. Our new working capital requirement, as we had calculated earlier, no, our annual expenditure is 120 lakh. So 120 lakh divided by what? This is our annual expenditure, na? So divided by 360. As we did earlier, 90 into 3, 90 by 360. Now I will do now 60 by 360. So how much it will come to? Come to 20 lakh. So see people, earlier our working capital requirement was 30 lakh. Correct? Earlier what? Our working capital requirement was how much? 30 lakh. Now our new working capital requirement is how much? Our new working capital requirement is 20 lakh. Can you see these both figures? The one in the oval, the new working capital requirement is 30 lakh. Another, sorry, the original working capital requirement is 30 lakh. And the new working capital requirement is how much? 20 lakh. So can I say that there is a reduction in the requirement now? But naturally, yes. Therefore, what is the reduction in working capital requirement? Earlier it was 30 lakh. Now it is 20 lakh. So the reduction in requirement is 10 lakh. Correct, people? I hope you have understood this. So what is asked in point C? Savings by reducing the average inventory holding period. So definitely this is a reduction. So if this is invested in, if this is invested in, I cannot say, in what I cannot say. If this is invested, what if this means what? If this 10 lakh is invested, then what will happen? Then returns would be, what is return? Point number 3 you check. Question number 5, point number 3. It can earn 10% on investment. So I will invest this 10 lakh rupees. So 10 lakh into 10%. What will be that? 1 lakh. Did you get the flow of the question, people? Hello, guys. Is this part understood? Sure. This reduction of working capital requirement is understood by all of us? Okay. Okay. Ronak has raised his hand. Let me see, where is Ronak? Ronak, turn on your video for a moment here. Let me see you. Hi, Ronak. Good morning. Yes, dear. Tell me.
Sir, I want to see the full solution, sir. To take screenshot.
That's it out. Okay.
No,
You got up just now, it seems, huh? Huh?
sir.
No problem. I'll do that. Want to see the full solution? See, I'll do one thing. I'll put it in parts. You go on taking the screenshots. Somebody else has raised their hand. Just a minute. I hope your screenshot taking is done. Then I'll move to the next page. Please take the screenshot over here also. Hope you are done. It's all about taking photo, not making a painting. And then the last part. Then, okay. If anyone needs of William Jug Bomul also, I'll put it in one screen. It is in one screen as such. Yeah. Those who got up late, joined late, internet was not working. This is for question number 4. The formula is given and the explanation is also given. Done? Yes, Sharani, tell me.
So you said that there is some reduction in working capital requirement, right? But anyways, if it's 20 lakh for 2 months, it will be 30 lakhs for 3 months, right? Again, after that 2 months, we'll be spending 20 lakhs for other 2 months. How can we invest again?
Earlier it was getting blocked for a duration of
5 months, 90 days.
correct. Now 90 days was getting blocked for means how much? 30 lakh was 30 lakh was getting blocked for a duration of how many days?
90 days.
90. So you go to the bank, bring 30 lakh, keep it with you,
Yeah,
right? Okay. Now how much would be blocked
20 lakh,
for a duration of?
60 days.
So your 10 lakh is not free. Suppose you're not withdrawing from bank, you're just putting from your own locker.
Yeah, got it.
I have 90 lakh in my, I have 30 lakh in my locker, which I'm going to use for 90 days.
Yeah.
Money was getting blocked.
Hmm.
Correct. Now I definitely know that my money will come back to me after how many days? 60 days.
Yes.
And for running the show of 60 days, I just need how much?
20 lakh.
So what about the remaining 10 lakh? Let it still lie there.
Yeah.
What we can invest means it is free.
Yeah, it will be in bank itself.
Sorry.
Like that 10 lakh will be in bank itself.
Exactly. So that will earn some money for us, na?
Yeah, yeah. Got it.
Jay wants to ask something.
Hello, sir.
Hi, dear. Good morning.
So they asked what will be the savings if the holding period is reduced by 30 days. So ultimately, the reduction in working capital will be considered as savings, right?
10
Or
lakh,
the amount,
yeah. And
or
the
the returns we get after the amount is invested.
both, that the reduction is 10 lakh and you can earn how much on it? 1 lakh. Saving,
1 lakh,
savings should be 10 lakhs and the returns
10
on it,
lakhs,
because the rate of returns is also
1
given,
year.
the returns will be 1 lakh.
Okay, okay. I just wanted to clarify that. Yes, sir. Thank you.
So I hope all people have written it properly and have understood whatever I've explained. So we have discussed with the question, see the whole chapter, I'll show you on the screen. Guys, the whole chapter is divided in sums, basically sums, not theory. Classwork section where we had 5 questions, right? And after that, see, we have something like this to be discussed in classroom. Okay, so these questions, they're quite similar to the questions which you have solved earlier. They are to be discussed in classroom. This is a virtual classroom, but it is, so we'll discuss now those questions. Okay, yeah, the very first question, uh, see, I try to cover up everything, including homework, whatever doubts, difficulties you may have. Even I try my best to cover up that also, for one simple reason that, see, okay, I try to keep you entertained in between, and I try to make sure that you go with a good pace. I don't want to go home early. The basic idea is that I cover up maximum possible things. Right? See, today also William Jack Baumol, I would have just told you, see, this is a formula, apply. Nobody was going to ask you how that derivation comes. But the whole idea is that to share with you maximum possible things, for which I want you to be a little quicker, right? That is the only contention. You might have thought this person is going quite fast. Did you feel that yesterday's lecture was quite fast? Still comfortable pace now. Only thing is that I want you to complete the things with my speed, okay? So that we get some good time to discuss all other things also. Other things means academic one, no other things. Okay? Yeah. So see, people, let's read this question. Question number 1 to be discussed in classroom. And the moment we start discussing this question, we remember someone. Okay. Someone means I mean to say classwork question number 1. No other person. Okay. This is the same question, guys. From the following information relating to a departmental store, you're required to prepare for 3 months, ending 31st March 2017, month-wise cash budget on receipt and payment basis. So again, the same thing, no? For Jan, Feb, and March. Okay, cancel this point. This is not required. So why, sir? Why cancel? You know, students, this is taken from the module. Earlier, there was a topic called as fund flow statement in our syllabus, but now the fund flow statement has gone. There's no more there in the syllabus. So even if in the module this is given, but in exam they cannot ask, right? So this part is not going to come. Okay, only cash budget part is going to come. And then if you see, if you compare this question with our classwork question, you feel sir, it is the same, sir. With the numbers, it is same. It is the same question, guys. So where is the difference? The difference is here. So in the first block, you would not have seen this plant value. Okay. In the first block, you would not have seen this plant value. Yeah. So in this box, the earlier question, the plant was not there, right? And then over here also, the plant was not there. But now, if you compare these numbers now, the question is same actually speaking. See, here the opening balance is 800. Here the opening balance is 800. Here if you see, the balance is same, 800. No change from here till here. But now if you see from here to here, from 800 it becomes 600, which is clearly written that depreciation to be ignored. How this will increase, people? Will this not increase because of purchase? Correct? This will increase simply because of purchase. So can I say in February we're going to make a purchase of February, we'll do a capital expenditure of 800. Correct, people? Do you agree with this conclusion? Hello, do you agree with this conclusion? Now see, if you compare the first classwork question and this question, only difference is that this purchase of this capital expenditure was written separately below the boxes. If you have a classwork question, you can just check it out there. This capital expenditure was written separately below the boxes, 800 rupees, which we have to draw as a conclusion from over here. Okay. And now if we continue further, see here it is 1600. From that 1600 is becoming how much? 1550. Okay. It's a breakfast time. Please feed them. Okay, so how this 1600 goes to 1550? This must be because of what? This must be because of sale, correct, people? So if you read the classwork question, there we are given specifically that there is a sale of plant and equipment. Classwork question, correct? If you can read the classwork question, it's separately written below, sale of plant and equipment, 50 rupees. So actually speaking, you need not even solve the question. It is the same. If you work out the solution, what will happen? Will there be any even a single rupee difference in the solution? No, it will be same. You just it's all about convincing yourself. See, okay, fine. This is the same as question number 1 classwork. Have you all understood this? Sure. Okay. So then we will talk about the next question now. But I think next question, yes, I will have to discuss this question, almost solve with you people at full length. So it's almost 9:30. Let's take a 10 minutes break. Let's be back at 9:38. Okay. Then, right? And then again we will continue. Just don't leave the meeting. Be there. Correct, people? Just mute or shut your videos, microphone, everything. See you at 9:38. Chalo, people, let's start. Come on, come on. Yes, people, let's resume. So we'll continue with the next question to be discussed in classroom. Second question. Okay. See now how the second question is given. See what is told. You are given P&L account for 2 years. Okay. For year 1 and year 2. You are given opening stock. You are given raw material. You are given closing stock. You read the question, but then we all know that raw material consumed is equal to what? Opening stock of raw material plus purchase of raw material minus what? Closing stock of raw material. So if in the question, if this raw material given was raw material consumed, if it was a raw material consumed, then opening stock and closing stock won't have appeared. In opening stock of raw material, when I add purchases, which is both on the debit side, and I subtract the closing stock, which is on the credit side, then what I get? Then I get raw material consumed. But in my question, I can see the opening stock also, and I can see the closing stock also. What does that mean, people? That means this raw material is not consumed, but this is the amount of what? Purchases. Do you agree with this? That this is a purchases, right? If it was a raw material consumed, then what would have happened? Then we would not have seen the stock of what? Opening stock of raw material and the closing stock of raw material. Either of the thing has to be seen. Either the raw material consumed single figure has to be seen, or because that's a net value, or you will see everything. As you can see everything over here in this question specifically, you can see the opening stock also, you can see the closing stock also. That means that the raw material is what? It's a purchase figure. Stores, guys, stores, actually it is stores and space. It's not written, I'm saying, I'm telling you, which is a variable cost. Matlab it is some kind of what? Indirect material required in the business. Then manufacturing expenses, other expenses, depreciation is given, net profit is given, sales, closing stock, and miscellaneous. Okay. Now what are you told? Sales expected are how much in year 3? 12 crores. Okay. As a result, other expenses will increase by how much? 50 lakh. Check out for other expenses. Right now it is how much? 1 CR. Okay. So in year 3, it will become how much? Year 3. Year 3, it will become 1.5 CR. It is already 1 CR. It will increase by 50 lakh. So I'll write over here. Therefore, other expenses 1.5 CR in year 3. Okay. Besides other charges, only raw material are in stock. So that makes it further clear. That confirms our claim that this stock, closing and opening stock given in the question is of raw material. So that makes our claim confirm ki, okay, this is nothing but what? This is for sure raw material purchases. Assume sales and purchases are in cash terms and closing stock, closing stock is expected to go up by the same amount as between year 1 and 2. Okay. So what is the growth in year 1 and 2? Did you check that? See here, closing stock is 1 CR, 1 crore. Okay. Here it is 1.5 crore. From here to here, it's a increase by 50 lakh, I can say. So what will happen from year 2 to 3? It will also increase by how much? 50 lakh. So can I say, therefore, from this condition, I can say closing stock of year 3, it will go up by the same amount. No? So from 1 crore, it has gone to 1.5 crore. Means it has gone up by 50 lakh. So from 1.5 crore, increase another 50 lakhs, so it will become 2 crores. So the closing stock of year 3 would be 2 crores. Assume that no dividend is paid. Fine, now no dividend paid, so no dividend paid. Company can use 75% of the cash generated to service a loan. Guys, there are 2 points to be understood. Number one, company can use 75% of the cash generated to service a loan. First of all, remember, service a loan means repay a loan. Service a loan means what? Repay a loan. 75% cash generated will be used for repaying the loan. Now sometimes students understand that this is an internal matter. Company can decide how much percent cash to be used. Sometimes students have come asking me, sir, where is this provision written in the Companies Act? There is nothing like that. This is a general understanding that I have some amount of money and I decide how much percent of it should go to the loan. See, if you ask me that, sir, are you going to take a new, would you like to take a new housing loan? I'll say, no problem. I'll take a new housing loan. Would you pay installment? Yes, I'll pay installment. Would you be okay if 75% of your income is allocated for installment? I said, no. It won't be okay. I'm the head of the family. I run my family. I have many expenses to look after. 75% of income going to installment, not done. 15 to 20% is okay with me. Fine. 15 to 20% goes to a monthly installment, will do. 75% goes to monthly installment. Then where do I? Then practically I will have nothing to do in that home. 75% going to EMI. Now a student like you becomes a chartered accountant. He is not financially responsible for the family. Parents are still taking care of it. You get a salary of 1 lakh, and out of that 1 lakh, you say it's okay. 80,000 goes for the installments. So it doesn't matter. I don't have to pay anything at home. It is looked out by my parents. I'm still a sponsored program of my parents, sir. So okay, good, great, excellent. So this percentage is nothing to do with the legal limit. Company management thinks so. So what are we asked? how much cash from operations will be available in year 3 for this purpose and ignore tax. So how much money you can generate in year 3, so that how much loan you can pay is what is asked in the question. How we will calculate that, sir? Yes, we will learn to calculate. So see, for doing all these things, whatever, first and foremost, the thing that we will need is we will have to estimate the profit and loss of year 3. Okay. So this is what we are solving is question number 2 to be discussed in class. So what we will prepare now is estimated P&L account for year 3. Okay, this would be now our estimated P&L account for year 3. So let's get into the question, the things which we could easily write. Let's first complete that. So see, here I will write to opening stock. Okay, tell me students, this is year 3 now. So closing stock of year 2 would become opening stock of year 3. Right, people? So what is the closing stock of year 2? The closing stock of year 2 is 1 crore 50 lakh. I hope you got this number. It's there in the question, correct? Okay. Then here I have to write to raw material purchased, but that figure we don't know. To stores. Right? This is what we have to fill up. Then to manufacturing expenses. To after manufacturing we have to other expenses. Can we fill up the other expenses right away? Yes. Why? Because it is already told now that the other expenses will go up by 50 lakhs, and we wrote in the question. No? See, now in our question we discussed that the other expenses are going to go up by how much? 50 lakhs. So other expenses would be 1.5 crore in year 3. So we can write the other expenses at list. One crore 50 lakh. Then okay, depreciation is also here. Now people, we know that depreciation is a fixed cost. Means what? It doesn't change unless the quantum of assets changes. So depreciation is 1 crore in both the years. It will continue to be the same 1 crore. Okay. Net profit I cannot write, and that has to be the balancing figure. Coming to the other side, the credit side, right over here buy sales. I think the sales is given in the question. 1 crore. It is how much? 12 crore. Okay. After sales, we have closing stock. People, have you understood that closing stock? What we are told, the difference will be same. The increase in the stock will be same as the difference between year 1 and 2. Okay. So what we discussed, let's see, from year 1 it is 1 crore, year 2 it is 1 crore 50. Gone up by how much? Gone up by 50 lakh. Same gap it will increase between year 2 and year 3. So already it's 1 crore 50. In that you add 50 lakh, so it will become 2 crore. Okay. Acha. What will I say about miscellaneous income? It is a secondary income, right? You all understand this? Not a main income. We can say it's a non-operating income. First year also 10 lakhs, second year also 10 lakhs. So we'll say fine, that will just continue to be 10 lakh, 10 lakh, 10 lakh. Okay. Yeah. Now we are left to find out this three things: raw material purchases, stores, and manufacturing expenses. Okay, so how this will happen? See, unless this happens, we cannot proceed further. So yes, we need to complete that. See, uh, to leave some space for calculation of net profit. Stores is a variable cost. Therefore, its percentage to sales in year 3 will be same as that of year 2. Okay, so first we'll find percentage of stores to sales of year 2. So year 2 is the amount of stores divided by sales into 100. What is the amount of stores in year 2? 1 crore 20 lakh, 1.2 CR, and the sales in how much? 10 CR. So it will come to how much? Come to 12%. Correct, people? So that means the percentage of stores to sales is 12% in the last year. So if nothing is specified in the question, then obviously this year also it will be 12% of sales. So how much is the sales? 12 crore. So 12 crore, 12% comes to 1.44 crores. So it will come to 1 crore 44 lakh. People, did you understand this way of estimating stores value? It is a variable cost. So percentage to sales remains same. Right? So last year it was how much percent? 12%. So what we assume, okay, fine, question specifies nothing. So the percentage of stores to sales will remain same. Obviously, sales has increased, no? Sales has increased in year 3, and from 10 crore it has become how much? 12 crore. So, but naturally the amount of expenditure will definitely increase, but the percentage will remain same. Continuing further, same thing we can say about manufacturing expenses. Same thing we can say about what? Manufacturing expenses. Absolutely same working. Manufacturing expenses is a variable cost. Therefore, its percentage to sales in year 3 will be same as that of year 2. So we will find percentage of manufacturing expenses to sales in year 2. Amount of manufacturing expenses upon what? Sales into 100. So for year 2, how much is our manufacturing expenditure? 1 crore 60 lakhs. So 1.6 CR, and upon 10 CR, so that comes to 16%. Now I will use the same percentage. So in manufacturing expenses, I will say 16% of sales. 12 crore is our sales, right? So 12 crore into 16% comes to 1.92 crore. 1 crore 92 lakh. Okay. Now what is left out, people? Tell me. The left out is raw material purchases, huh? Hai na? Once this is done, then we can close and get a net profit for year 3. But see, people, listen to me. Just now, as we did, we said that manufacturing expense is a variable cost. Stores and spares is a variable cost. So I'm having a question for you people. Raw material purchase is a variable cost or raw material consumed is a variable cost? It's a very important question. Raw material purchase is a variable cost or raw material consumed is a variable cost? What is this, Mohsin? This is for me to decide. Raw material consumed will be variable cost, no? Yesterday also we had discussed, we produce 1 unit, we consume 1 unit of raw material. We produce 2 units, we consume 2 units of raw material. We produce 3 units, we consume. I did not say purchase. If only a lot of stock is lying in my godown, I may not purchase only. What will move proportionately? The purchase will move proportionately or the consumption will move proportionately? The consumption will move proportionately. So if at all, like stores and manufacturing expenses, if at all I have to count the percentage, I have to calculate percentage. I'm not going to calculate percentage of purchases. I'll calculate percentage of what? Raw material consumed. Are you all clear to what I said? Okay. So what we would say over here, raw material consumed is a variable cost. Therefore, its percentage to sales in year 3 the same as that of what? As that of year 2, correct? So how we will calculate? Therefore, percentage of raw material consumed to sales in year 2 would be raw material consumed upon what? Sales into 100. People, for sales is fine, 10 crore. For raw material consumed, now we will have to take some efforts. How we will get it? Raw material consumed, second year, opening stock plus purchases minus closing stock. Correct now? We will have to put some working behind us. So opening stock of year 1, I'm sorry, year 2, 1 CR, purchases 4 CR and closing stock is 1.5 CR. So that comes to 1 plus 4, 5 minus this, 3.5 CR. Hope you've understood what I calculated. This is what I've calculated, what? Raw material consumed, which I can fill up over here, correct? So so that makes to how much? 35%. So guys, listen, what I will do now, I have already written opening stock and closing stock of year 3, correct? Student come asking me, sir, you could have removed that and directly written raw material consumed. Absolutely fine. Just that in year 1 and 2, they have written opening and closing stocks. I have written that. Anyways, now we can calculate raw material consumed for year 3 over here. Now we know that it's 35%. Therefore, raw material consumed in year 3 will be equal to 35% of sales of year 3. How much is the sales of year 3? 12 crore. So 35% of 12 crores will make it to how much? 12 into 35%, 4.2 crore. But the thing is that people, we can't write this 4.2 crore over there. Why? Sir, you are increasing our working, sir. Why are you writing this? Why are you writing? Why you are doing like this, sir, to us? Why are you writing opening stock here? Why are you writing closing stock here? Sir, had you removed this, no, you would have directly written. I agree with you. Soul-heartedly, I agree with you. I am in sync with you. Just that I'm maintaining the presentation. If you don't like it, absolutely remove opening stock and closing stock and directly write raw material consumed. So your working time is saved. But I don't think that it's like that big mountainous working that if we start doing it now, we will not be able to give November 21 attempt. It's a matter of a minute. So we can just write formula for RMC of year 3. Formula remains same. Opening stock plus purchase minus closing stock. How much we got RMC of year 3? 4.2 CR. Opening stock, check out 1.5 CR. You will be able to see in your solution. Closing stock 2 CR. This is minus 0.5, that goes that side plus 0.5. So purchases would be 4.7 CR. 4.7 CR means 4 crore 70 lakhs. Sir, what have you done? You've increased our working. Sorry, huh, people. Sir, you're still doing like this. It says, sir, 1.5 of opening stock plus 4.7 of purchases minus 2 of closing stock. Sir, we are getting 4.2 CR raw material consumed. Sir, instead of writing all these three figures, can we directly write that figure? I am absolutely in no denial. Absolutely fine, sir. If you don't write these two values over there, and instead of doing this one extra working, which is taking a lot of time of yours, you could have directly written raw material consumed 4.2. Zero problem. It comes to the same. What I told you just now. Why am I writing like that? Because in first year and second year, it is written like that. How much extra working? 13 pages? No, just 3 lines of extra working to arrive at purchases. That's it. Okay. Yep. So now, if you take a look, people, it is all filled up. Okay. It is all filled up. So we can start taking total. Twelve and 2, 14 crore 10 lakh. Oh. Okay, take a total 0.5 CR plus 4.7 CR plus 1.44 plus 1.92 plus 1.5 plus 1. 12.06 minus 14.1. 2.04 means I get my profit 2 crore 4 lakh. Understood? Okay. In the copy paste mode. Okay. I'll share the screen. Sorry for disturbance. Yeah, people. It's not yet over. Huh? We don't have to just calculate net profit. What is the question asked to us? And how much cash from operations we will have? Okay. Should I? Sindhu. Where is Sindhu? Sindhu, stop.
Sir, actually, why we are taking opening stock and closing stock given in the textbook are of raw materials only? Can they not be of finished goods?
Sindhu, you have a question with you? Sindhu, you have a question with you? Sindhu not talking to me. Sindhu doesn't like me. It's
No,
okay.
sir. Of textbook.
It's okay. No, don't like me. No problem. But you read the question now, my dear. Line number 2. Line number 3 after the box.
Okay. Understood, sir.
Oh, people don't believe me at all. Very bad.
Thank you, sir.
You got that line now? Only raw material are in stock?
Yes.
Yes. Jai Ho.
Hello, sir.
Hi, dear. Tell me.
Sir, I understood the calculation for stores and manufacturing expenses, but I was just wondering that why we taking sales of last year as a base to calculate the variable cost of this year?
No. I have taken sales of last year and figure of last year also. I'm not taken.
Yes, sir, but
So it's a variable
yes,
cost, no?
but to calculate the variable cost,
Huh.
so it'll depend upon the sales.
Correct. So last year's variable cost is how much? Let's talk about stores. Last year's variable cost is how much?
1 crore 20 lakhs.
Correct. Last year's sales was how much?
10 crores.
10 crores. So last year it was 12% of the sales. Yes or no?
Yes.
So how much will be it? How much it will be
Yes.
this year if nothing is specified?
12%.
It will remain 12% only, na? If nothing is specified. If the sales has increased from 10 crore to 12 crore, definitely the amount will increase, but the percentage will continue to remain same, not here.
Okay, so this variable cost depends upon the sale. So that's why the same percentage you're considering
So
it this
the
year.
percentage will continue to remain same, na?
Okay, okay.
Suppose, see,
Understood.
you run a manufacturing unit. Okay, you run a manufacturing unit. You last year you made a sale of 10 lakh, and you spent around say 1 lakh on wages.
Okay.
So what do you understand? Okay, last year my sale was 10 lakh, and my wages were 1 lakh.
1 lakh.
So of my total sales, the wages comprise how much?
1 lakh.
10%?
Yes, 10%. Yes.
Correct. So this year you are expecting a
It'll
sale
be
of
10%.
Sorry?
Yes. So it'll be 10% of the sales of this year.
Yeah, exactly. Tentative figure.
But yes, sir. But instead of sales, shouldn't it depend upon the number of units produced?
So what is sales? You produce and sell, that is sales, na?
But it's not necessary we sell the entire stock, right?
But ultimately whatever you have sold on, for that only the wages will come, na? See, when I have to estimate the variable cost, when I have to estimate the variable cost, it is a certain percentage of sales last year, so it will continue next year also. It's an
Yes,
estimated
that
figure,
part I
sir.
understood.
It's an estimated value.
Yeah. Okay.
Well,
Okay, I
continue.
understood, sir. Thank you. Yeah, sure.
Okay, so we are not yet done, people. This is not the final thing. We just got a net profit. We still have to continue. What we have to find? We have to find cash from operations. So what is the difference between the net profit and cash from operations? I'll tell you, see. So the next part of the working, net profit for year 3, 2 crore 4 lakh. Net profit for year 3 is 2 crore 4 lakh. Now, while calculating this net profit, did you deduct something which is non-cash? Check out. But obviously, you deducted what? Depreciation. What kind of expenditure is this? Is it a non-cash expenditure? Answer is yes. This is a non-cash expenditure. So people, what happens? Because you write this 1 lakh rupees in the P&L, profit goes down. But does the cash go down? No. So if I have to arrive at cash balance, what I will have to do? I'll have to add back this 1 crore rupees. So I will say add back depreciation 1 crore. Correct? So it will become how much? It will become 3 crore 4 lakh. People, did you understand the concept of adding back the depreciation? Sure, na? That it's a non-cash expenditure. Profit comes down, but the cash doesn't come down. Okay, okay, fine. But that's not all, huh? Wait a minute. See, there is an increase in stock during the year. We only calculated that it increases by 50 lakh, right? So this increase in stock of 50 lakh, people, definitely my cash will go away. Did you understand what I say? How the stock will increase? It doesn't grow on a tree, no? You have to spend. Your money will go out. So what will be your cash from operations left out with you? Cash from operations left out with you would be 2 crore. It's 50 lakh. So 2 crore 54 lakh. Did you all understand this increase in stock? Hello? Have you understood this increase in stock leading to loss of cash? That I buy the stock, no, my cash balance will decrease. Correct? Drashti, want to ask something? Yeah, tell me.
Sir, it's not mentioned, no, that we're like buying it for cash, like because when it's not mentioned, we automatically take it as credit sale, right?
Arey, Mataji. I have to make you read now the way I made you read Sindhu. Now I have to make you read also. You also read the third line. Third line, first sentence was dedicated to Sindhu. Third line, second sentence is dedicated to you. Read. Below the box, read the third line, second sentence. Drishti. Or read aloud.
Only raw materials are in stock.
That sentence is dedicated to Sindhu. This is not for you.
Amount sales and purchase. Oh, okay. Okay.
Keshav.
Sir,
Yes.
this expenses stores and all you took off year 2.
Yes.
Why can't we take off year 1?
Because see what happens in the last year is supposed to continue. Listen to me. Shh, shh, all of you. I have a milk vendor coming to my home. Okay. Last year he used to charge me. Second last year means what is 21 is going on. No confusion. 20 is spent at home. No, so doesn't understand. 2019 he used to charge me 30 rupees a liter. Okay. 2020 he started charging me 34 rupees a liter. Since 21 has started, he's absconding. He has not yet come to deliver milk at home. What should I assume? 30 rupees or 34? 30 or 34?
34.
34. Logically, the earliest rate, the latest value addition. What say?
Yes, sir.
Put down your hand if you're done. Okay. So finally, we are left with cash from operations of 254, and what therefore cash available to service loan What is told in the question? It will be 75% of cash from operations. So we are left with 75. We are left with 2 crore 54 lakh, of which we will use 75% to repay our loans. So now the management knows that how much cash we can have, 2 crore 54 lakh. Please type zeros properly. How many zeros? 5 zeros you put after 254. It comes to 1 crore 90 lakh 50,000. So see, with this estimation, what happens here? See, this is all estimation. We as a finance manager estimated this number. Okay, the cash available to service the loan would be 1 crore 90 lakh 50,000 if everything goes correct. Whatever big estimation you have done for P&L, no? If the sales happen this way, if the opening stock, raw material purchase, consume stores, blah, 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 blah. If everything happens this way, you will be left with a cash of 1 crore 90 lakh 50,000 for repayment of loan. So now management has a very clear idea when they will go to borrow, they will check the rate of interest, they will check the installment, and they will take the total of it. Okay, in the next year, repayment should not cross 1 crore 90 lakh 50,000. And accordingly, they will borrow so that the everything working in the business will go smooth. See, even after this working, submitting to management, if we submit this working to the management and tell them, see, you will have maximum 1 crore 90 lakh 50,000 rupees available to repay the loan. And after that, management takes a loan with an outgo of 3 crore. What will happen? Nothing. The institute won't be able to function. Correct? With this conditions, we have estimated that 1 crore 90 lakh 50,000 will be available for repayment of loan. So management has to take a clue from that. Management has to go a little more conservative. Okay, 1 crore 90 lakh 50 is available. We will take such a loan where the outflow is nothing more than 1 crore 50 lakh. Got it? But if the management becomes extra desirous, having 1 crore 90 and they take a loan which with an outgo of 3 crore, the organization would be finished. Right? You still writing? Hello? You are writing yet? There is a new trend to take screenshots. So fine. I'll put it like this. So you can take a screenshot. I'll put the next page also. Done? Done now, people? Yeah. Okay. So we will now move to what? To be discussed is done. Then homework. And you know now, homework is your job. Hello? Homework is your job. But you are basically my job. Right? So homework is in a way my job. Right? Yeah. So I'm not going to solve it in full, but I will guide you sufficiently wherever there can be hindrances, hiccups, that I'll discuss with you. Okay? Right? Okay. So people, when we go to homework section 1 now, and we'll be like flattened. We'll like feel like whether we have done any, we've learned any cash budget till date or not. Because homework section, question number 1 is like a full-fledged bouncer coming all the way to you. Okay. So see, I have ways of dealing with it. See, before I start anything, I'll tell you one simple thing. Okay, and if you do that, that will be more than sufficient. Okay. Still, what I will just take few basic points from the question. Okay. What happens? No, the setup is totally different. So you feel like lost. Actually, nothing. No big deal, people. See, Prachi Limited is a what's the time? We have good another 30-40 minutes now. Yeah. Actually, background is still there. Close this. So, Prachi Limited is manufacturing company producing and selling a range of cleaning products to wholesale customers. It has 3 suppliers and 2 customers. Now, this is possible. No, it has only 3 suppliers and it has only 2 customers. So how is this possible? See, guys, look at Indian Railways. No, right? See, it has limited suppliers. It's not everybody. What do you think? The railway engines will be like available in the mall? Like you go down, you go to the Lakdi wala pool, and then you see a lot of people selling railway engine. One fine day you also buy one. It's not like that. Some businesses have limited suppliers and limited customers. Prachi Limited relies on clear funds forecast to manage its cash. Okay, you are accounting technician, so you are okay, and you've been asked to prepare a clear funds forecast for the period of Monday 7th January to Friday 11th January. Inclusive means you have to make it for 7th, 8th, 9th, 10th, and 11th. Only 5 days. 5 days. I hope you heard it very clear. Okay. Now, see, credit term, our customers, how many customers we have, people? We have only 2 customers. Only 2 customers we have, right? So, W is our first customer. Credit is what? 1 calendar month. What is BACS? It is written, don't worry. Bankers Automated Clearing Service, and it is instantaneous. What does it mean? It is instantaneous. See, if we allow him a 1 month's credit, 1 calendar month, we do the sale on 7th Jan. We do the sale on 7th Jan. So this money will come in our pockets on 7th Feb. Instantaneous. The moment he transfers, the money will come to you. Okay. You do the sale on 7th December. This money will come to you on 7th Jan. This money will come to you on what date? 7th Jan. Why? Because this is instantaneous. Right? So see, when I'm talking about 7th Jan, no, in my receipts, I should see the receipts of W, but which one? This one, the one which I've sold in December, 1.3. Did you understand this? Hello? Did you understand this? Yeah? Okay. Another thing, do you people have the module of the institute? So how do we have, sir? No results yet. You're not yet registered, right? But see, people, to get the module, why you need to be registered? So what are you talking? Sir is on a different note today. Right, people? Did you get this? Hello? Did you understand this? Right? See, these are the typical points in this question. Once you start reading carefully, now you understand. It's not that you never understand only. It is easy. Okay. Again, see in our question. We will go on checking like that. Okay. See. So this point is clear. Now let's talk about suppliers. You see how it works out. We have 3 suppliers. So A Limited, B Limited, C Limited. Okay, fine. What are the credit terms? 1 calendar month. And what is the standing order? Oh, let's see. Now to understand, you to read below. What is the standing order? Prachi Limited has set up a standing order of 45,000 a month to pay for supplies of A Limited. Okay. This will leave Prachi's bank account on 7th January. Understood? Every few months, an adjustment is made to reflect the actual cost of supplies purchased. You do not need to make this adjustment. Did you understand anything given over here? Did you understand the setting between A Limited and Prachi Limited, or you did not understand? See, now Prachi Limited has only counted 3 suppliers, A, B, and C. Okay, so you know what happens? The boss of Prachi and the boss of A have decided. Mr. A, go on selling the mal, go on selling the goods. Correct? And Prachi Limited has told him what? Every month, how much I will pay you? 45,000. Every month I will pay you how much? 45,000. Whenever we get time now, we will meet and we will settle. You understood? See, means not exactly related with this, but I can share one experience. When I was working for one firm, no. So it used to happen like this. There was like we were to pay some fees for our work done, subcontracting the work to the other firm. So I was the junior over there. So I used to take the work. All days I used to take the work from my office to the other office where we used to like sublet the work to them. Okay. And then, my boss and the other company's boss, it was decided that every month we will give you 25,000. So who used to carry that 25,000? I used to carry. Because every month it was fixed that I will give how much? Means my company will give how much? 25,000. And whatever is a upper wala settlement, over and above that, when the bosses would meet, they would carry it out. They would settle the account. Same thing is happening over here. Same thing is happening over here. What is agreed between the company, Prachi Limited and A Limited? See, whatever you sell 65,000, you sell 55, 45, doesn't matter. Every month, how much we will pay you? We will pay you 45, which will go from account on what date? 7th. So see, in payments, no, you will see payment of A. How much? But 45, irrespective of all these amounts. Okay, let's check. Let's check. These are all receipts. Payment. See, for A, how much is that? 45. Did you get it? Whatever A supplies to us, we will pay him the fixed amount, 45. And we are very clearly told that we need not carry out the adjustment. Means in these 5 days, no adjustment is getting carried out. Understood? Each and every term you read now, people, so you will understand. You'll gradually understand. It's all like this. It's all like this. So even if you read for B Limited, 2 calendar months. Okay. Any specific condition given? See, Prachi Limited will send out by post checks to B Limited and C Limited on 7 Jan. The amounts will leave its bank account on what? Second day following this, excluding the day of posting. Second day. It will leave on the second day. Okay. So you are paying on 7th January. This will, okay. But the period is 2 calendar months. Sorry. 7 January will pay on Jan to Feb to March. Leave it. Not for that period. This will pay on December to Jan to Feb. Leave it. November. Oh, 7 November to 7 December. 7 December to 7 January. Yeah. Means this amount you will pay. Correct? In January. 7 January will pay. What is told? This will leave on the second day following this, excluding the day of posting. So 7th we will post this 75,000. No. Correct? And then this amount will go on after 2 days, means on 9th it will go. So this amount will go on 9th. Okay. Achha, what happens with C Limited? Why? Sir, show us now in the solution. I'll show, but then the amount will be different. So you'll get confused. Wait. Okay. What happens with C Limited? No credit period. So 7 Jan, whatever they purchase, now they will pay immediately. But then you know what will happen? Even this will leave after 2 days. So on 9th Jan, which 2 amounts will leave? 75,000 will leave and 95,000 will leave. Got my point? So 75 plus 95 you do, people. So 170 is what you would see over there. And that's why I told you, wait. Okay. Payments. Achha, it's shown separately. Good. Did you see that? 75 and 95 going on 9th. Hello, people. Are you able to understand something what I'm discussing with you? Or it's like a solo performance I'm doing, talking. You are waiting for me to say goodbye. You're getting the things now? Huh? Okay. We were in question. Yeah, here. Okay. See, wages and salaries. This is the damn easy. Weekly wages, December is 12,000, January is 13,000. Monthly salaries are also given for December and January. Now, what is told? Factory workers are paid wages, paid cash wages weekly. They'll be paid 1 week's wages, that is on 11th January for the last week's work done. Okay, no, so I think it's very simple. So we just, that is their work for a week in hand. So for the last week's work done in December. Okay. So if you check out the solution, we'll have wages over here paid on last day. Nah? The day is not visible, but it is last day. That means 11th. Okay. And what is told about salary? All the office workers are paid salaries by BSES. So you know the BSES now. It comes instantly. Salary for December will be paid on 7th January. Such a sweet people. 56,000 will be paid on 7th January. And that's what you see in the payment, 56,000. Got it, guys? Okay. What is next? Other miscellaneous payment. Every Monday morning, the petty cashier withdraws 200 from company's bank account for petty cash, and that money goes straight away. So Monday is 7th, na? So you'll see on 7th, no? See, petty cash has left immediately. Left. Okay. I'm funny. Then room cleaner is paid 30 from petty cash. Now, do we see any effect of this? This statement, guys? No effect. Sir, after a long time, we see something in FM which has no effect. Why? We have already withdrawn 200 for petty cash. Now, from that we are paying. So why we will write again and again in the payments? So this will have no effect. Okay. Office stationery will be ordered by telephone on 8 Jan. Okay, fine. To the value of 300. It is paid by company's debit card. Such payments are generally seen to leave on the next working day. Means on 8 January, we will swipe the machine. 8 January, the transaction will happen, but the money gets deducted on the next day. So on 9th January, in the payments, we should see 300 rupees. And we will see 300 rupees. See 9 January. Right, people? Hope you all understand this. Okay. Now, the most crucial part I'll explain you. Unclear fund floats. Okay. Well, sir, what is this unclear fund float? Okay. See, receipts, what we discussed. Where are the receipts? Yeah. See, this receipts of 180 came to us. Okay, on 10th. Let's go to the question now. What is told about this receipts? The receipts. Yeah. See, this we sold on 7 Jan. And what is told about this check? It will be cleared by 3rd day. So what we said, okay, 7 Jan the check is there, but we will get the money 8, 9, 10th. You know, so you know what? It's an unclear money. See, in my cash book, I've already passed the entry. Bank account debit to X. So according to me, bank balance is increased by 180. But when this money will actually come to me? The money will actually come to me on 10th. So in my unclear floats, see, in my unclear fund float, I'm writing this. See, 180 unclear, 180 unclear. This is 7th. This is 8th. This is 9th. 10th it is gone. 10th it is gone. Why it is gone on 10th? For the simple reason that 10th it goes over here. 10th. See, that's what is the annotation irritating there. They remain the same place. that 10th, see 7th, 8th, 9th it was there in unclear floats. Now it goes over here in clear floats. Did you understand what is that unclear float? Oh God. Mohsin, can you display it again, please? See what Mohsin has done for me is showing me my laptop's battery is down. It is 25 minutes, it will still work. 25 minutes. It works. It works for 7 to 8 hours. Okay, I'll put it on a charge. Okay. Relax. I'm not going anywhere. Thank you, Mohsin. Wow. Very innovative things I keep learning from you. People say that you come to learn from me, but I think I learn more from you people in this process. People, what I told you about this unclear float, did you understand? Okay. See, when we have a checkbook, no, and suppose I give a check to someone, right? There is one slip in that checkbook itself where I keep writing the debt, the party's name, the balance before issuing the check, the amount of check, and the balance left after issuing the check. You'll always find the senior people in the family filling it very carefully. Right? If you have grandparents, you'll always see them keep filling it. And we are very reckless. We like just write the date, write the name, and write the amount. It doesn't matter. But they're like, no, don't do that. You should know what is a clear float and what is an unclear float. See, you have 5 lakh rupees in the account and you give some person a check of 4 lakh rupees. So that 4 lakh rupees is going to go now. After 3 days, it will go. Till that time, the account will show a balance of 5 lakh. You issue another check of 2-3 lakh, then everything will bounce. Correct. So this idea of maintaining this clear float and unclear float is the same. Now you're going to ask me, sir, what is this 170? What is this 170, 300 in the payments? We discovered now we are going to give them a check. See, this one. This got cleared, this 3 amounts, 75, 95, and this 300. Okay. See, we gave these checks on what date? I think we gave them on 7th, right? This 170 ka check we gave on 7th, and it got cleared on 9th. So 170 on 7th here, 170 on 7th. But sir, why 170, 300 on 8th? 170 of 7th, 170 of 8th. 300 swipe. You did a swipe of 300. Did I again stop sharing the screen? See, we're talking about this, that why there is a unclear float of 170 on 7th and 170, 300 on 8th. So it is related to this. See, this payment we justified to suppliers 75 and 95. Correct. Now we totaled up in our question also, if I'm not wrong. We totaled up in our question also. Where it is one. See this one, 170 wala totals. Correct. That this payments we will do on what date? I justified now that this 75 and this 95. These payments we will do on one. We will do on this we will do on 7th, and they will clear on 9th. So what we are doing in our solution? In our solution, what we are doing? Okay, we paid this on 9th, accepted. But in unclear float, now I'm writing this 170 over here. Right? And I'm writing this 170 over here also. Now you are going to pounce on me. So this is not 170. This is 170, 300. Where from that 300 come? You remember swiping debit card for stationery. So you swiped it on 8th, na? But that money went on 9th. So see, this all is gayab. Now it's gone. 170, 170, 300, and suddenly it becomes 0. Where it gone? It has gone to payments, actual payments. So that is the whole idea about the clear and unclear floats. Did you get my students? Right? Yeah. And you can see that video as well, which I told you. Right? Believe me, it's me only. Okay. Now, continuing further. We don't need this now. So you have an option. You can go like this to the site and get the soft copy till you clear your foundation and get your registration and get your books. What I was discussing next. Yeah. Question number 2. Okay. Now, question number 2 is comparatively easy. Only thing, you know what? This condition you need to understand at length. See, the firm had a cash balance of 20,000 on 1st April. which is the minimum desired level of cash balance. Any cash surplus or deficit above or below this level is to be made up by temporary investments, liquidation of temporary investments, or temporary borrowings at the end of each month, and interest is to be known. So what is this? So this is that part which I showed you in the format, right? That I'll write over here itself. First we write what? So we write opening balance. Add what? Receipts. What do we get? A. Correct? Huh? Just going through a format of this. Less what? A minus. Total of it is what? B. Then what we get, sir? A minus B. Okay. Now what we had discussed, that is, if A minus B is not sufficient, no, what we will do, we will borrow. Where is this balance? Correct? If this is more than enough, we will do what? We will repay. Still enough, then we will what? Invest. And then, sir, this will be the final balance which I will carry forward. Right? Remember this? In basic format we had discussed at the beginning of this topic. Now, see what is told. Read that point. Read that point 7. The firm had a cash balance of 20,000 on 1st April 2017, which is minimum desired level of cash balance. Means what? In the opening balance itself on April is 20K. Got it? And that is a minimum desired balance. So you know what should happen? At the end of this month also, you should have a balance of 20 to transfer further. This 20 has to go in month of May. Minimum balance. So how, sir? Okay, see. Suppose the total of my A is 1 lakh. Okay. Let's say the total of B is say 95,000. Okay. So A is 1 lakh, B is 95. So what will be the left out amount? A minus B would be 5,000. But it is in the minds of the management that whatever happens now, next month opening should be how much? Should be 20. So what we will do in this scenario now, people tell me, we'll borrow, we'll repay, we'll invest. We'll borrow, everybody agrees on that, right? And we'll borrow how much? 15, right? So here I will make a borrowal of 50. So the balance will become 20. Fine, I carry it over here. Now let's say this is again 1 lakh. Okay. And let's say this is so let's say this is 65,000. Okay. So now you tell me how much is left out. 35K is left out. But then out of this 35K, how much I need to put over here for sure? 20K definitely I want as a closing balance. People tell me how much surplus is left. 15K is left. 15K surplus is left. What do I do with this 15K surplus? Tell me. I repay or I invest? I repay or I invest? Drashti, you want to invest? Everyone, please keep your video on. Okay, coming back to the question, Drashti, what to do? We should repay first, no? A loan is pending. We had borrowed in the earlier month. Huh? The loan is pending. And still you want to make investments? No, that doesn't make sense. So what we will do? We'll prioritize. And what we will do? Whatever surplus we have now, we'll repay. Got it? So see, 35K was A minus B, minus this 15K, we are left with 20K. Next month, exactly 20K will come. Okay. So we had borrowed, but we have repaid. Now let's say again the same numbers happen, that this is 1 lakh and this is 65k. So what is the balance? 35k. Out of this, how much you want to keep over here? 20k. How much surplus is left? Again 15k. Do you have any previous borrowings which are yet to be repaid now? No. Then what we will do? Invest now. Now the second option, invest. Got this. See, means we have to go with the numbers, follow the instructions given in the question. So we'll invest 15k. We'll move on. See, this is the meaning of that. So now when you solve, you'll be able to tackle with it. In case you just want to make a note of this. Is this part well understood? Okay. Okay. Now, few other points in this question. Let's take a quick look. See, we have to prepare a monthly cash budget for what? 6 months. Okay, fine. Sales are given to us. Sales are given to us from January to October. Wages and salaries are also given. Of the sales, 80% is on credit and 20% is for cash. You know that we had done a similar condition in one of the questions. What was that question? Yesterday's third question. I agree, percentage was different. Cash was now 10% and credit was 90%. Remember now? No, not yet. See this. Classwork question number 3. See where we had this condition, right? You can see this now. Correct, huh? 10% was cash sales, 90% was credit sale, and the 90% credit sale was receivable after a month. Now, what is the condition over here? See, of the sales, 80% is on credit and 20% is for cash. Understood, sir. Manage. Absolutely. I know, I'm very sure that you will manage. What is written next? See, 75% of the credit sales are collected within 1 month and the balance is collected in 2 months. So just a moment, let us discuss for 1 month and it will be pretty clear. See what it says. Sales of January is how much? 1 lakh. So what will happen? Suppose we go on bifurcating this. Okay. January it is 1 lakh. Out of this, how much is going to be cash sales now? 20% is cash and 80% is credit. So cash sales would be 20%, that is 20,000. Okay. Credit sales is 80%, that is 80,000. I hope everybody has understood this point. But what is told about collection? See, in the earlier question, it was like just 1 month and the collection comes, right? What is told over here, people? See, it is told over here that 75% of the credit sales are collected within 1 month and the balance in 2 months. So even out of this, no, out of this 80,000, 75%. This you are sold in Jan, no? 75% will be collected in Feb. and the balance 25% will be collected after 2 months, that is March. So 75, 25 will be 60K and 20K, right? Have you guys understood this pattern of collection? Right? You know what kind of presentation, sir, we will do for this? What kind of presentation? Suppose we need to understood concept wise, you are understood, but when it will overflow, a lot of months will come. So what kind of presentation we'll do for this? I'll show you that. Give me a moment. Hello, people. You're getting messages from administration that you have to switch on your videos. Don't be so stubborn. It is for ultimately our safety. Yeah. Okay. So see, suppose how many months we've been asked to prepare? I think it is for 6 months, right? From April onwards, we have to make it for 6 months. So suppose you have to prepare it. Suppose you're working on this, how to present, because see, that also matters. Now at the end, it's like, how do we manage to present the things? So suppose you're making a note for cash sales and what? Collection from debtors. For this purpose, you're making a working note. First of all, you need to know that it is for how many months? For 6 months. So a lot of months preparation will go into the place. 1, 2, 3, 4, 5, 6. So done now 6. No, not sufficient. 7. See, people, we have to prepare it from April. Absolutely agreed. Correct. Now you're thinking like, sir, April, May, and June, and July, and August, and September should be sufficient, sir. Why that extra thing? It is required. See, and March will be required. So why, sir? Yes, I'll tell you. See, first you will write sales over here. Okay. Then below this you do 2 parts. What is that? Cash, 20%, credit 80%. I'll show you for 1 month. Okay. What is the sale of Feb? 120. Okay. So let 120 over here. Now 20% of this means 24,000. 80% would be 96,000. Correct. Now see, cash sales. Okay, we are making it from April. So this cash sales is of no use. But what will happen? This credit sale, guys. Below this, I have to write no collection from debtors. Okay. How the collection happens? What is the rule of collection? Check out. The rule of collection is 75% in 1 month and 25% in 2 months. So 75% 1 month, 25% 2 months. So you know what will happen? Out of this 96,000, 24 4s are 90, so 24 3s are 72. Okay. So out of this, you know what will happen? 75%. That is how much? 72,000 will come in March. Correct? And then the remaining 24,000 will come in when? Will come in April. And that's why I made this. Did you understand this pattern? Hello, people. Have you understood this pattern? So now can you prepare this? Now it's like going filling forward. And which totals, which amounts you'll be concerned with, that also I'll show you. That also I'll show you. See. Which amounts would be our concern? See. Cash sales, whatever comes now from April till September. Getting my point? Whatever is the total sales, of that 20% will write like this. Correct? Collection. See people, March, whatever you sell in March, okay, of that 75% will come in, okay, whatever is a credit sale, let's say, whatever is a credit sale of March, of that 75% will come here, April, and 25% will come here. You got the placement? So like that, you have to go on like this, and then finally, this will be your total. You'll have to take a total. You'll have to take a total of collection. Let's do one thing. Let's fill it up for March also, and then we will stop. Let's take the value of March. What is the sale of March? 140. Okay. So I'll put 140 over here. Right? 140 in 20 and 80. So 20 would be 28. 20% would be 28,000. 80% would be how much? 1,12,000. Okay. Of this 1,12,000, 75%. Enough of maths. 84,000 will come over here, and then the balance 28,000 will come over here. Got it? So this total of two amounts, this 84 is different and this 24 is of that fab. So 84,000 plus 24,000, 108 is your what? Is your collection from debtors in the month of what? In the month of April. What say people? Did you understand this? Hello? Sure, now. You have to go on filling up like this, but at least I have shown you the way. Okay, this is how it will be calculated. Now manageable. Okay, people. Almost everything from almost what? Everything we have discussed at length, the full topic. Correct? All questions, classwork questions, questions to be discussed. Right? Keshav has to ask something. 1 minute. Right? Homework questions, everything. Yes, Keshav, go ahead. Lecture is over, you can ask.
Sir, in illustration 9,
Voice is not clear.
illustration 9, sir, illustration 9.
Uh-huh.
I did not understand from uncleared fund float, how did you get the amount?
See, basically, whenever you issue a check, no? Be there, Keshav. Hello?
Yes, sir, I'm there.
Whenever you issue a check, no? So see, we on 7th of that month, we have issued 2 checks.
Yes.
7th, we have issued the checks, but the checks will clear on what date?
Second day, that is 9.
9th, yes, correct. Very good, correct. So see, 7th, no, I wrote the checks. Correct? And I gave it to my supplier. That money will get deducted from my account on 9th.
Yes.
Till 9th, what I have to keep in my mind?
That money is there in bank.
The money is going to go. I've already given the check. So somewhere I have to keep a record. So in my unclear float funds payment side, I write, okay, on 7th I have issued a check 170. On 8th also I'll maintain a record. Okay, the checks are issued but not yet cleared. Got the point? When that check will go? On what date will the check go? 9. So 9th on, what do you see in the solution? Unclear float fund doesn't show that 1,70,000. Did you understand?
Yes, sir, understood.
See, what is the whole idea about it? The whole idea is that you keep a record of the checks that are issued but not yet cleared. So when the next checks you issue, you will be having like rational while issuing that. Right? You will not over issue the checks. Is the point clear, Keshav?
Yes, sir, clear. Thank you, sir.
Yeah. Anyone else? Anyone else, people? Any doubt? I think we have gone at length with the topic. Nothing is left out now as such. Right? Okay, the lecture is over. You have a doubt solving session, but if there are doubts, then I'll solve. I'm waiting for you people. If you ask some doubts, then I will definitely clarify. What say? Nothing to be asked. Done. Okay. Then if nothing is to be asked, then definitely we'll stop. Right? But see, people, one topic gets completed means your responsibility starts. You have to revise it at the regular interval. Please don't just ignore. Yeah, now one topic is done. Done means done. Don't do that. Okay? Fine. Shall we stop then? If you have nothing to ask. Okay. Chalo, bye-bye. Let's meet as per the next timetable, whatever comes. Okay. Till that, please keep revising. Okay. I request all of you solve a question at least in 2-3 days. It's okay. Even if you solve one question, select one question of your choice and solve, so that you remain in touch of the topic. Please do that. Do that for me. Okay. Chalo people, have a great time. Bye-bye. Enjoy your day. God bless you all. Bye-bye. Yeah, bye-bye. Bye.